Thanks to high mortgage rates, mortgage refinance rates, and even higher home prices, the mood among hopeful home buyers has never been bleaker. In Fannie Mae's most recent national housing survey, only 14% of consumers said they think it's a good time to buy a home, a survey low, the mortgage investors say. Home prices increased nearly 4% year over year in September, according to the S&P CoreLogic Case-Shiller Homes Price Index, and many housing market predictions expect them to continue increasing in 2024. For the potential buyers on the sideline, it will be a bit of bad news. Lawrence Yun, chief economist at the National Association of Realtors, says of next year's housing market. In 2024, home buyers will likely see increased competition and multiple offers on homes, he says, driving up prices further. This challenging housing market has many would-be buyers wondering if home prices will ever go down, or if they might crash in the near future. Some are even hoping for it. According to a recent Lending Tree survey, 44% of Americans believe that the housing market could crash this year, and over a third say they want the market to crash, believing it's their only way to be able to afford a home. But is there a chance the housing market will crash anytime soon? And if it does, will that make homes more affordable for first-time home buyers? Is the market going to crash in 2024? Though a large number of Americans believe the housing market is at risk of crashing, the economists who study housing market conditions overwhelmingly do not expect a crash in 2024 or beyond. The latest housing market predictions for 2024 for some of the top industry groups see home prices increasing somewhere between 0.7 to 4.1 year over year. Realtor.com forecast does predict that home prices will fall, but only by 1.7%, which wouldn't substantially increase affordability for buyers. Why are economists so sure that home prices won't crash? There's just simply not enough supply, Yoon says. So the economists of supply and demand, if there's a shortage, prices simply cannot crash. The US is currently between 2.3 million and 6.5 million units short of a healthy housing supply, according to Realtor.com. Even if something happened to cause a lot of home buyers to drop out of the market, demand likely still couldn't drop low enough to push prices down. While it's perhaps understandable that some hopeful home buyers feel their only chance to become homeowners is for the market to crash, they might not realize that the last crash is part of how we got into this situation in the first place. In the mid 2000s, many lenders were offering mortgages to high risk borrowers without asking for proper documents needed for a mortgage application. At the time, home builders were rapidly building new homes to meet increasing demand. Home builders were producing right and left. So much home construction, Yoon says, it was one of the most active supply producing situations. So we had an oversupply. While the housing market crashed, leading to the Great Recession, it destroyed the home building industry. Many companies went bankrupt, and a lot of builders permanently left for jobs in their other industries. In the years that followed the recession, the industry struggled to recover, and few homes were built as a result. Now, more than 14 years after the end of the Great Recession, home buyers are still feeling the effects of the last crash. Anything is possible, and nobody has a crystal ball to see for certain what will happen in the housing market in the coming months and years. If the market theoretically were to crash, would that make it easier to buy a home? It is possible, but it depends on what caused the crash in the first place. If it's anything like the last crash, where many workers lost their jobs, taking advantage of a lower home price won't be possible for many homebuyers. And given the current supply conditions, it's highly unlikely that we see prices fall significantly without there being a larger economic fallout. So, what's a home buyer to do? Instead of hoping for lower prices, here are some things you can do to achieve your home ownership dreams in 2024. Expand your search. If you can't afford to buy in your current city, consider looking elsewhere. Talk to a local real estate agent to find out if you can find more affordability a few towns over. Many times, average home prices can differ quite a bit from one zip code to the next. Just be sure to also consider other factors before you move to a new area, such as your commute to work and whether you want to be in a certain school district. If you live in a high cost metro area, moving out of the city can make home ownership significantly more affordable. For those who have some flexibility to go further out into the suburbs, exurbs, or even smaller towns to the next county, there's better affordability, Yoon says. Wait for mortgage rates to fall. The one good spot of good news for home buyers is that mortgage rates are expected to go down in 2024. While Yoon says we likely won't see a return to the historic lows borrowers enjoyed in the 2020 and 2021 market, but 30-year fixed rates could end up somewhere in the 6 to 6.5% range. Lower mortgage rates means more people will be able to afford to buy a home. As rates fall, you could potentially save hundreds of dollars per month on your mortgage payment. Last but not least, get as much help as you can. Mortgage lenders are increasingly offering incentives to entice prospective borrowers, and many of the best mortgage lenders for first time buyers offer things like down payment assistance or interest rate buy downs to help borrowers get into a home. Make sure you're taking advantage of all the assistance available to you. Look for first time home buyer loans and grants offered by lenders, as well as down payment assistance offered by your state or municipality. In conclusion, Kevin O'Leary, a Shark Tank investor and star, has warned that the Federal Reserve's interest rate hikes could cause economic chaos. O'Leary has said that investors should buy stocks now instead of waiting for interest rates to fall, and that you can time the market. He also warned that rising interest rates will lead to economic turmoil due to high inflation and the cost of debt. Higher interest rates can represent challenges for the economy, which may slow business activity. This could potentially result in lower revenues and earnings for a corporation, which could be reflected in a lower stock price. Some traders predict a flat or down market in the first half of 2024 due to high inflation, recession fears, and rate hikes from the Fed. Kevin O'Leary, however, believes that the commercial real estate sector is on the brink of collapse and will bring with it ripple effects that will be detrimental to investors and small business owners. He explained on his unique situation while appearing on a recent episode of Kudlow.